Welcome back. Hope you're having a good morning. Well, we start off a new series today, which is the December series. So let's discuss a few stocks with Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, who joins us on the show. Hi, Sid. Good morning and good to see you. Well, we've got some news that just flashed for our viewers on the screen. NCC, they won a big order, 3,300 crore rupees, which is large enough in size. What's your view on the stock? And if you have a view on any other stock from the sector, or you prefer to play it via NCC?
Yeah, good morning, Nigel. So thanks for inviting me here for the show on Friday morning. If you look at the expectations post the Maharashtra election was that the construction activity or the spending Capex activity will increase going forward because H1 we had not seen much of activity, and especially from the government side, NHI orders have not been there. So the activity would go for sure increase going forward. NCC somehow we don't have coverage, but I think it's a very positive development. Some of the other companies in the space, if you look at on the overall Capex theme, KEC International is something that has been consistently getting orders in the transmission and distribution side. That is something that we kind of like a lot. Larsen is a preferred pick to play the entire Capex theme, be it on the construction side, be it on the capital goods side. We believe that with the increasing Capex spend, both from the government as well as from the private Capex cycle, so that should be positive for Larsen. What has also helped Larsen is that the global order book has been pretty strong. Global business has been strong, and the domestic business should now see some recovery. And that is something that should drive growth for Larsen going forward.
No, absolutely. I get that. Just a quick word on, two areas, Siddharth, where we saw favored price action. One is all these defense names. Even yesterday, if you look at the PSU defense, the index, it ended higher within in a market which was actually down sharply. Cochin Shipyard, BEL, of course, has been outperforming, and a bunch more, BDL, etc. What do you like there, Siddharth?
Yeah, so Prashant, if you look at the overall defense space, fundamentally things have not changed much. What happened over the last couple of months is that valuation-wise, things had gone a little bit over the roof, and that is what kind of consolidated, and we saw the correction mainly on the valuation front. In terms of results, we see consistent delivery from most of the defense players, be it the Bharat Electronics, HAL, Mazagon. So what we believe is that, again, H2 is generally a better quarter for the overall capital goods defense space. Q4 is the strongest quarter that we see for most of the defense players. Within that space, we like Bharat Electronics, which is our preferred pick. We have a buy and a target price of 360 over there. We also like HAL, which is a market leader in the aeronautic space. Plus, Mazagon, I think valuation-wise is now very comfortable. It's a leader in the defense shipyard. And if you look at the results, Q2 has been very strong numbers. Valuation-wise, also on a forward earnings basis, we see 30-35 times price to earnings, which is much comfortable compared to some of the smaller names, which we believe are trading at a higher valuation. So in terms of comfort, growth, as well as valuation and earnings growth, we like BEL, HAL, and Mazagon.
Got it. All right. Sid, what about the Swiggy versus Zomato argument? Both seem to be doing well. Swiggy, in the IPO, not too much interest. They left some money on the table. Kudos to the promoters as well as the bankers for that one. And the stock has given you a quick fire, 20%. Your view and the choice between both of them?
Yeah, I think, Nigel, it's an interesting debate once both the companies are listed. So earlier, we only had a choice of Zomato, which was doing well. The only difference that I see is that while Zomato has already turned profitable, the path for profitability for Swiggy is still some time away. Based on our estimates, we are expecting the company to turn profitable only by FY27. Nonetheless, growth in this segment is pretty strong. Both have raised capital. Swiggy through the IPO, Zomato through the recent QIP, it has raised 8,500 crores. Blinkit has been doing very well. Swiggy has regained some market share, but if you look at the entire space is heating up. Zepto has also raised money. Some of the other large players, Big Basket, Amazon, Flipkart, they have all getting into the quick commerce space. So exciting times ahead. But for now, we believe that Zomato is our preferred pick in the between Swiggy and Zomato. We will go with Zomato. We have a buy rating, target price of 330. They have also unveiled the District app, which is the one-stop destination for the going out theme for the which we believe again could play out in a big way over the next few years. The 8,500 crores QIP that will help them in aggressively expanding the Blinkit operations, adding new stores, warehouses. So overall, we see it's a full package of growth, and current valuations are still comfortable given the growth and the company which is already turned profitable. So Blinkit would also turn profitable. Cash generation is pretty strong. So we'll go with Zomato with a target price of 330.
Okay, so Zomato over Swiggy. Got it, Siddharth.